Hello and welcome. From this video onwards, we will start learning about various financial ratios. Okay? We take help of these financial ratios to decide if we want to invest in a company or not. Okay? So, in this video, we will learn about earnings per share. And then as we proceed, we will learn various other important ratios. Okay? So let us begin with earnings per share. Earnings per share, commonly called as EPS, is calculated like this. This is the formula to calculate EPS. It is net profit minus preferred dividends divided by total outstanding shares. Now, what is this net profit? What is preferred dividends? What is total outstanding shares? I will explain everything in detail in a few minutes. But for now, let us forget about this. Okay? Now, what does the EPS say? What does it give an idea about? EPS is the money a company earns from every share. It tells you how much money a company has made from one share. Okay? Now let me take an example. Let us say that we are analyzing a company and I have substituted values for net profit, preferred dividends and total outstanding shares and calculated the value. And let us say that we have obtained the EPS as 6 rupees. Okay? Just an example. It means that every share is earning 6 rupees. Every share is earning 6 rupees. Let me go in detail. Let us say that in the previous year I had bought a share of this company worth 10 rupees. Okay? Last year I paid 10 rupees and bought a share from this company. Last year it has performed, and last year when we calculate using this formula, the EPS is 6 rupees. What it means is the 10 rupees share that I had bought in the last year has earned 6 rupees. That is what EPS is. How much money did the share that I had bought in the last year has earned? It has earned 6 rupees. Okay? Now, what do we do, or what does the company do from the EPS? Some part of the EPS is retained for further development. The company has to reinvest the money in itself so that it can grow. Correct? We know about this. So, some part of this is retained for further development, and some part of it is given as dividend to the shareholders. Okay? Now, we are not worried about EPS. What we want in a good company is annual growth of EPS. Okay? We want annual growth of EPS more than 25%. Now, what does this mean? Let me take an example. This is 2023. Okay, as of making this video, the year is 2023. I have the details of previous year, which is 2022, and I have the detail of the year before that too, 2021. Let us say that in 2021, the EPS of share was 100 rupees. Let us say that in the year 2021, the EPS of the share was 100 rupees. What we want is annual growth of minimum 25%. Meaning, in 2022, the EPS should be more than 125 rupees. Try to understand. Pause the video if you want to. Take out a pen and book and write down if you want to. Okay? What we want is more than 25% growth. Meaning, whatever EPS was there previous year, this year it should be 25% more than that. If previous year EPS was 100 rupees, this year it should be more than 125 rupees. So that is what we want. We do not care what the EPS is or how much the EPS is. We just want annual growth of 25% or more. Okay. Now, is it only this? Do we want anything else? Yes. We want quarterly growth of EPS too. We want it to be more than 20%. We want it to be more than 20%. Now, let me go in detail for this. We know that there are 4 quarters, correct? Let us say that we are analyzing a company which makes firecrackers. Okay, crackers or firecrackers. See, this is one quarter. This is one more quarter, correct? This quarter comes after this quarter, correct? Yes. Now, according to our rule, the EPS of current quarter should be more than 20% of previous quarter, which is this. Correct? No, that is not how we do it. Of course, the previous quarter of this quarter is this. Of course, previous quarter of quarter 3 is quarter 2. But we do not analyze like that. Let me tell you why. When is the sale of firecracker highest? When do people buy firecrackers? During the time of Deepavali, correct? During the time of Deepavali. And when is Deepavali? Deepavali is in this quarter, correct? So we see increased sales here. Now, can we compare the growth from this quarter to this quarter? No, because people generally do not buy firecrackers during this quarter. So if we compare this and this, then obviously this would be more than this in terms of sale or earnings per share. This would be more than this. It is not how we do it. What we do is we compare quarter 3, for example, in this case, quarter 3 of this year with quarter 3 of previous year. Okay? This is the time when people buy firecrackers. So this of this year compared with this of previous year. Okay? And what we want is more than 20%. Meaning, let me take an example. If in quarter 3 of 2021, if in quarter 3 of 2021, the company had EPS of 100 rupees, then in 2022 quarter 3, the EPS should be more than 120 rupees. That's all. Okay? When we compare the 2 quarters of 2 years, we want a growth of minimum 20%. All right. Yes, I hope this is clear. Now, let me come back to the formula. What is net profit, what is preferred dividend, and what is total outstanding shares? Net profit is the profit that you can find in income statement or profit and loss statement. You know about profit and loss statement, correct? After EBIT, EBIT, earnings before interest and tax, and after deducting tax and interest, whatever profit we can see, that is net profit. I'll show you in a few minutes. That is net profit. From net profit, we subtract preferred dividends. Now, what are preferred dividends? I had made a video about preferred shares. Okay. So, if a company has preferred shares, then preferred dividends would be first paid to them. Okay, fixed dividend would be first paid to them. So, net profit minus preferred dividend divided by total outstanding shares, meaning how many shares does the company have totally. When we substitute the values, we get EPS. All right. So let me take an example. All right. All right. I have opened up the income statement or profit and loss statement of Escorts Kubota, and I have opened up the annual report. Okay. So here you can see net profit of 644 crore rupees. Okay. Now 644 crore rupees is the net profit. Let us say that preferred dividends is 0. All right. Let us not go and search how much is preferred dividends. So let us assume that is 0. What do we want next? We want total outstanding shares. If you go to Google and if you just search Escorts Kubota total outstanding shares, you will get results. Okay, you have to you'll have to search for a few minutes, but you will get here. I am getting it directly. So it says the company has total of 11.05 crores. So let me take 11 crores itself. Okay, I have to divide. I have to divide this by 11. So how much do I get? I get EPS of 58.54 rupees. Okay, 58.54 rupees. Now, what does this mean? This means in the last year, one share of Escorts Kubota has earned 58.54 rupees. Okay. Now, if we go to this is from this is moneycontrol.com. We have ratios here. If we click on ratios, you can see basic EPS as 58.85. Okay, you can see, you can notice slight difference. Do not worry about it. Okay, so 58.85 rupees. So we have got almost that. All right. So this is how you calculate. Now, but in reality, we do not go on calculating EPS of every company. It is difficult to go on searching for net profit, total outstanding shares, preferred dividends, and do that. And also, it is difficult to see and compare if this is matching or this is matching or passing. We cannot go on looking if a company has this or passes this. Okay. So for that, we use screeners. And the site that I use is screener.in. You can go to this website and register for free. You don't have to pay any money. All right. So after going to screener, you have to click on screens, and you have pre-made screeners here. Let us not go into this. Click on, you have to click on create new screen. Okay. When you click on that, you will get a box where you can put in your queries. Okay. Now, what do we want? What are the conditions that we want? We want to see how many companies pass this condition and this condition too. What is this condition? EPS of current year should be more than 25% of previous year. So let us put in that. I'll say EPS. When I type EPS, I will get a lot of EPSs. The one that I want is this. This is for current year, or I can say previous year. All right. So EPS. EPS, what should I want? I want it to be more than. So for more than, we use this symbol. You might have learned it in your mathematics class. Okay. So EPS of current year should be more than what? EPS of last year. We have this second option. Okay. EPS of last year. But is that it? Do we want EPS of this year greater than EPS of last year? No, we want it to be more than 25%. So what I will type here is into, which is star symbol. Star symbol is into multiplication 1.25. 1.25. All right. So 1.25 into this should be more than that. All right. So this is our first condition which corresponds to this. I hope you are able to understand this formula. Now let me click on run this query. When I click on run this query, I get all these companies which pass this condition. Okay. How many companies are there? 1693 companies are there. So in total there are above 5000 companies, but since we cannot do all these calculations for all the companies, we use screener. So when we typed in the formula for this, we were able to filter out the companies which passed first condition. But then we have second condition too. What is it? It is quarterly EPS should be more than 20%. So what we will do is EPS, okay, EPS latest quarter, EPS latest quarter should be more than EPS preceding year quarter. Okay, EPS of preceding year quarter, meaning previous year quarter, same quarter. Okay, and what do we want? It should be greater than 20%. It should be greater than 20%. So when I click on run this query, I'll get an error. This is because we need to type in and. What this says is, give me the companies that pass this condition and this condition. Okay. So if you do not type in and, you will get an error like this. So make sure you type in and, because we want companies which satisfy both the conditions. Correct? So let me click on run this query now and see the number has reduced to 1374. It was 1600 something in the first condition. After I put in second condition, I have 1374. So these are the companies which pass both the conditions. Okay. Now how did I get this criteria? Generally we use this. Okay. Generally we use 25% and 20%. That's all. I do not have a reason why 25%, why 20%. All right. This is what people have been using and this is what I use too. 25% minimum and 20% minimum says that a company is growing good. All right. So that is why we use this. All right. So now we have 1374 companies. Do we go and invest in these? No, because there are many more ratios to learn to. We will slowly learn ratios, various ratios, and put them in this box and keep on filtering until we arrive at the best companies. Okay? Yes. So I hope the concept of earnings per share is clear. Earnings per share is clear. This is enough for this video. I'll see you in the next video. Till then, take care and thank you for watching.